Yes guys, hope you're all well. This is me pretty much showing you guys exactly how I trade gold. This is exactly how I pass out my prop firm challenges, as well as obviously trading my own life capital. And then I also have my small accounts where I flip accounts on gold. Last time I think I took £100 to £3,000. I'll show you guys all of the proof as well later on throughout the video. And this is my personal approach. I've got a lot of things jotted down in terms of what I want to pretty much show you guys, but obviously I want to go in a lot deeper. I don't really like to plan much things, so let me go without further ado, so save you guys time as well, and that way you guys can pretty much gain as much value as possible. Anyways, my personal approach when it comes to gold is I like to look at the higher time frame bias. So what is my pretty much draw on liquidity? So let's say, for example, let's say price is trending in a in a bullish scenario. If I understand that, okay, we have reached a certain level where prices actually swept liquidity, this high right here would be my draw on liquidity. So this is where I'm expecting price to pretty much reach into. And then I could then go, okay, cool. Now I'm looking for price to pretty much come into at least the midpoint of this move. So now let's say, for example, this is where I would then be targeting. Towards the left, right, I would look for my higher time frame bias. So let's say, for example, this could be a thing such as a order block, a fair value gap, pretty much, my entry criteria. Let me go on to text right here. So let's say this could be your order block, fair value gap. In terms of higher time frame, I like to look for anything 1 hour and above. So let's say this is your 1 hour order block. This is your drawn liquidity. Now, as you can see, price has already done a liquidity sweep because we've actually taken out the drawn liquidity. The fourth thing I then look for is my timing. I like to ensure that obviously my timing is also perfect. So once the timing is also on my bias as well in terms of in my setup, I will then go ahead and obviously take the trade where, normally I have like a 20 pip stop loss and I aim for 60 pips. Or sometimes I could scale in if I'm doing like a flip. It really depends. But this right here is the main scenario. This is the main trade setup that I actually look for. Now I'm going to show you guys in terms of how it would actually look like in a real scenario. Now when it comes to gold as well, right, I like to actually look for certain timings. So for example, let's say when I look for trades during Asia session, lately Asia session has absolutely been popping on gold. I'm talking 4, 5, 6, 700 pips. Gold would just be flying. So this is what obviously I like to do. I like to look for trades around the 1:45 a.m. Now let me show you guys how I personally do it. So let's say, one second guys. Let's say this is currently your Asia session. Normally gold does a thing where it always kind of sweeps off some sort of high. In this scenario, right, obviously I have it marked out just, for this video reference, just cherry picking it out for you guys. So I don't want you guys going, yeah, little replay warrior. I'll show you guys the live accounts as well. This right here is your 1:45 candle. Now normally what I would like to do is the push up. So let's say, for example, in this instance where you see this little push up right here, this low becomes my drawn liquidity. So when I do enter this trade, right, I have multiple confluences such as what? Let me show you guys. On a 1 hour time frame, this is like a volume imbalance right here. This is a volume imbalance. Price has actually swept this high right here. So can you see how price has obviously tanked first? We've swept this little low right here because gold loves to sweep previous lows and previous highs before it makes that move. This is the low that now price has pushed up in terms of what? To take out this high right here. Now that this has happened, right, I like to look for, okay, cool. Price has not actually retraced and offered us any sort of thing in terms of that. I will then go into a 1 minute time frame. I will then look for, okay, cool. Where is that 1:45 minute candle? This is then that candle that you would then go, okay, price is now tanked. We have then actually rejected this 1:45 candle and we've actually closed beneath this. Once we've closed beneath this, right, this is where I would understand that, okay, now I can enter off of this candle right here with my stop loss pretty much being on this little swing high, or if you're looking for a big trade, then you can give yourself a little wider stop loss. And then where would I target? My first take profit would actually be this low right here, this structural low right here. And obviously if take profit hits, that is a great 1 to 3 risk reward ratio. Now that would mean that on a regular funded account, that is pretty much your 10% mark if you are risking, let's say, 1%. However, I wouldn't be risking 3%. I would pretty much be risking 1.5 to 2%. Normally I like to build up a little bit of a cushion, but that's only because I've obviously been trading for 6 years. Then you just pretty much let the trade run. Around a certain area, I would like to obviously look to make sure that my trade is in profit. Around here, I would actually close out 50%. And then of course my trade will be at break even. And then we'll let pretty much the rest of the trade play out. Around this area right here, I will then move my stop loss to this high. Now if we do get taken out, it sucks, but at least we've taken 50% profit, and then when price does stop us out, we're stopping out with an extra 40 pips of profit, as you guys can see. Boom. A bit of a shame because, you know, price has obviously stopped us out, you know, at, you know, pretty much stop loss in profit. But either way, if price is coming down, let's say about 200 pips, and you're trying to just pass your funded account, most likely you would have already closed out. So, you know, either way, it's a win-win scenario because you've pretty much, not only have you taken 50%, your stop loss is also in profit. And around this sort of region, you know, if you're up 200 pips, surely you must have closed out something a little bit more. Now that obviously you guys understand what times I like to trade Asia, this is my normal day-to-day setup. Let me show you guys. Let me show you guys. Oh. Let's say, for example, right here. As you guys can see, with this little high point right here, this is a 1 hour order block. This is your 1 hour low. Can you see how that price has obviously moved down with absolute speed during Asia session to take out this low? Once price has actually taken out this low, right, where would actually become your drawn liquidity? This area right here. This high right here becomes your next drawn liquidity. This is where price is actually trying to push to. Why? Because can you see this high point right here? Do you see how price has obviously swept it? Boom. This is the damage that's caused from this little high point right here, or you can say this high point. I normally like to go off of this high point right here. This is where the candle that caused the damage. So that high to me becomes a, you know, like a reference point. Now for me to obviously enter a trade like this, right, I would need to see at least a couple of things. I would need to see obviously price rejecting it. I would need to see some sort of sells, that sort of thing. So let me show you. Let's say, for example, market is opened. We have pretty much tanked. Let's say market open has absolutely tanked. And then we got that little bullish scenario where price is actually pushed up higher, taking out these highs. And we also literally respected this little order block right here. This for me is actually a good scenario on multiple reasons. Why? Because this kind of shows me that obviously price is not only, sorry, 1 second. This actually goes to show me that not only is price, you know, respecting this higher point, but we're also actually coming back down to take out multiple low points, such as where. Let me make the chart a little bit more cleaner. This will show me that price is actually taking out this low, this low, this structural lows. That means that obviously price is now sweeping liquidity. Then that way I can obviously then go ahead and then start to look for my entries in terms of like a 1 minute time frame. Normally I'd like to get off of the second entry point. What does that mean? When price obviously creates this little higher low, I like to wait for the next higher low, and then once price respects it, this would normally be my go-to entry. This is where I would enter. My stop loss would be just beneath this little wick. And then obviously I would then go ahead and obviously continue to target, let's say, the highs. So let's say, for example, areas where price has created equal highs or something along the lines of that. So let's say right here is where price has created the most equal highs. This is where I will then go ahead and obviously target, or I can just target the first initial high. Sometimes you don't even need to overcomplicate it. Just look for something simple and just pretty much trade off of that. And this is the same setup I go for pretty much week in, week out for my Asia sessions. I like to look for multiple confluences. So for example, this was that little 1 hour order block where that initial push down. So you can already see how price has obviously taken out a lot of liquidity. So let's say this right here, one, price is tapped in to your higher time frame order block. Second, you got that, that liquidity sweep. Three, price has obviously come down and obviously grabbed more liquidity as well. So it's done that manipulation as well. And then going on to four, sorry guys, I did spell manipulation wrong, but either way, it is what it is. I'm not going to change that. We have timing as well. In some scenarios, we don't actually have the 145. So for example, on that push up, but either way, you can actually look for the 145 sell-off. So for example, right here, just above this little high, that could be your 145 setup in order for you to then go ahead and look for this sort of sell. Targeting where? The first draw on liquidity is right here. And that is 100 pips. And guys, this just goes to show you, this is why everyone is now trying to trade gold. Because gold moves so much. I mean, look at this. In a space of 48 minutes, gold has tanked by 320 pips. Normally, in a scenario like this, this would be my take profit. This swing low right here. And then obviously you could then go ahead and counter it back with the same setup, pretty much same exact model. Now, another thing that I actually wanted to show you guys was, just turtle soups. Now, I like to obviously draw your attention as to what gold actually does. Now, I'm obviously going to delete everything, right? I'm going to delete everything, and I'm going to show you guys exactly what gold does. Boom. So we're going to go on to, let's say, this sort of thing right here. And I'm going to ask you guys, what do you see? Boom. Boom. In a scenario like this, right, what would you normally see? Now, most of you guys would probably just see like order blocks and stuff like this. However, how I like to view it is prices actually swept this low right here. This for me would be a turtle soup. This is where price, obviously, when you're trying to catch bottom ticks, these are the lows that you're trying to actually look for, the highs and lows. Why? Because look how much price is actually flinged up from this area. Now, can you see how price has actually taken out all of these structural lows? This is why, this trade is such a high probable trade. However, catching these trades, obviously don't go against it. Always make sure you're waiting for extra confluences. And I'll show you guys what I like to look for as well. This is a turtle soup right here. Once again, this is a high point. What do you see? The moment price grabs this high, price then goes ahead and reverses. And what can you actually really target? You can just target the first structural low. So for example, this will be your first structural low. And even this is literally about 400 pips. I mean, if you catch in a trade like this, it's 400 or 500 pips. The second setup was what? Look at this. This was a low, price has pushed up. And then once we've actually come back down and we swept it, prices then pushed back up. And gold does this so many times. This is why most people, they literally get clapped when it comes to trading gold. Because they don't actually understand as to what they're looking for. Because gold does it so many times. Like for example, let's say you've entered a buy position right here. Your stop loss is right beneath this low. Boom, gold comes back, stops you out, and then heads back up into your direction. Now, most people, they don't actually understand as to why gold has done this. So that's the sort of thing. You need to make sure you understand how gold actually moves. Now, I'm going to actually show you guys, obviously, the flips that I've actually done. So I'm going to add this on. I'm not the best editor. I'll be very honest with you guys. I hope you guys have obviously actually learned something as well from this as to my personal approach and how I actually like to look at gold and obviously my day-to-day setups. I'm going to obviously add in the flips that I've also done as well. So make sure you guys watch it as well. The normal brokers I personally like to use, because I always get questioned a lot in terms of my Instagram, what broker do I use? I like to use Vantage. Why? Because I trust Vantage. Now, I've put in a lot of money into Vantage. I've withdrawn a lot as well. Incredible. Now, if I'm looking for 1 day withdrawals and I want it to land in my crypto, then I like to look for tradersway. Why? Because I can put in money, I can withdraw it pretty much on the same day. Absolutely amazing. You literally can't go wrong with it. Now, this whole entire trading thing is not obviously financial advice. This is just my personal day-to-day approach on how I like to pass my prop firms and how I obviously make my money from gold. This is my personal approach. So hopefully you guys can go and obviously you can backtest it and obviously see if it works for you. That sort of thing. Now let me go ahead and obviously add these trades.